So Tom, square that with the traditional quote unquote real estate business and what that means in terms of if you're doing this, you're obviously doing less of traditional real estate, and because yes, it's an inflection point, but it also feels pretty radically different to some extent.
Yeah, and for sure it is. And I view it as an accelerant, right? This pandemic is just an accelerant of what was happening in any event. And I think that the difficult thing for great entrepreneurs like Marc rolling to a great public company CEO, public companies like consistency and themes they can see a decade ahead. And what that produces most of the time is a bureaucracy and ordinary returns, right? I mean, that's really what it is. So if you looked at REITland was all about dividends. Just give me long-term contractual obligors on the other side and let me collect net rents. And that doesn't exist anywhere. We were already on that path, right? WeWork, Airbnb, Amazon.com. My garage looks like a Simon shopping center, right? By ordering whatever you want online. So the value of real estate has become less and less important in the midst of this accelerated disintermediation of all those things that are important, including information, by the way. I think if you want extraordinary returns, if you want to get out of the norm, which the problem today is that, right? There's too much liquidity with too few places to go, which is we're seeing this boom in the equity market while we're having this devastating financial and pandemic crisis in the world, unemployment across the globe at higher levels than we've ever seen, and anarchy in just about every nation imaginable. So to me, you go where the puck is going, and real estate is a very unmoving, stable asset, which is the good news and the bad news. And if you don't pivot, if you don't move, eventually those bricks will fall on your head, and that's been the history of it.
This is a massive dislocation in the entire way we think about real estate. Do you agree? And so what do you do with your existing holdings in the context of that?
As a coward, what we've done is sell it. So investors are looking for some diversification from the equity market, and real estate has always been that, right? If you look at institutional investment, the purpose of it has really been diversification, that that the covariant factor of it is strong. I don't believe that to be true. I don't believe real estate is going to vanish. What's going to vanish is the balance sheet, the difference in assets and liabilities. This real estate, this office building will always be of value, but at a new basis to someone else. Because I, as an occupant of this office building, am going to do something that has never been done in the last 50 years, which is to say I'm not going to pay contractual rent. And whatever my business is, if I'm a retail operator in a shopping center now, every retail operator is saying, you, owner of the shopping center, are going to be my partner. So I'll pay you a percentage of my gross rent, but I don't know what my contractual rent is. I don't know if I have customers. I don't know if I'm going to get deliveries. I don't know what the regulatory framework of this pandemic is. I have no idea. So if you want me to occupy it, you're going to share that risk with me. Well, that's not what real estate investors were used to. So I think it changes. It doesn't go away. It just reprices itself, right? Every aspect will reprice itself and reinvent itself. I think all of the existing things will stay. They're just not going to stay in the kind of investment theme that investors looked at over history.
And so, Marc, what does that look like for the overall, now as the CEO of the whole shebang, what does it look like for the mix going forward between traditional real estate and digital infrastructure?
Well, look, as a firm, Colony 2 years ago, Jason, we had 2% of our assets were in digital. You know, fast forward to today, we're almost at 50% rotation of our assets under management to digital. So we've had enormous transformation of the company in the last 2 years. The work's not finished yet. What we've told investors is where we'll be, you know, by Q1 of next year, the year following. So by the end of next year, we should be about over 90% rotated into digital as we continue to find the right homes for some of these legacy assets that Tom talked about. And so monetizations have gone as we would have expected.
And so are you getting, is the appetite out there for those traditional real estate assets, especially in hospitality and commercial?
It's incredible. I think, you know, we've been pleasantly surprised at how we've been able to not only exit some of these assets, but really exit at positive net book value, which is the key. I think The lodging sector is interesting. I think one of the things I was telling Tom the other day that I noticed is we're seeing private equity come into lodging, which is something I haven't seen in 20 years.
Right.
And I'm not talking about Barry and Starwood, I'm talking about real private equity firms backing management teams and management companies looking to acquire hotel assets. Not only management platforms, but actual assets. So we've got actually a pretty good limited service portfolio. And so we've done great work over the last 6 months restructuring all of our debt. We're now in a great place where we can think about what is the right path for those set of assets. And so we'll spend the rest of this year thinking about the logical home for our lodging assets. And I think we're going to actually see probably a pretty good result looking at the total amount of capital that's sitting on the sidelines.